On Wednesday's FOMC meeting, the consensus expects the committee to raise the target range for the federal funds rate by 50 basis points to 0.75% to 1%. This would be the first double rate hike since May of 2000. And if you remember, that was when the Fed essentially burst the dot-com bubble. Also expected is an announcement regarding the start of reducing the size of the Fed's balance sheet. Expectations are reductions of $95 billion to $100 billion per month in bond maturities without active sales. It would appear the markets are fully prepared for a 50 basis point rate hike and maybe a modest probability of a 75 basis point rate hike. The markets are also expecting just over 10 rate hikes by year end and just under 11 rate hikes through February of 2023, at which point the Fed is expected to halt its tightening cycle and maybe start easing, but we'll have to wait and see. Today, we're not going to follow the markets. Rather, we're going to look at a potential stock, or should I say an ETF. LKZ wants me to take a look at some possible new picks, while Snowfire wants me to look at some dividend stocks, and the Ambassador wants me to mix it up. So today, we'll mix it up, and soon we'll start taking a look at stocks and dividend stocks, I promise. But given the FOMC meeting and the rage about interest rates, let's take a look at the iShares 20-plus year Treasury Bond ETF, or TLT. And this ETF tracks the investment results of an index composed of U.S. Treasury bonds with remaining maturities greater than 20 years. So, when looking at this chart, you'll need to keep in mind that when the price of TLT goes down, that means the bond yield is going up and vice versa. So the price of TLT is the inverse of the bond yield. And lately, when the bond yield was going up, TLT has been getting crushed. So, let's take a look. And we're now taking a look at a 20-year monthly chart on the iShares 20-plus year Treasury Bond ETF. And the symbol again is TLT. And the close on Tuesday evening was 117.97. And as you can see, the price is perched right on the 200 EMA. After slicing through both the 50 and the 20 EMA here, boom, on our way down. Now, the price seems to want to reach the level it had back here in late 2018. Again, the TLT is essentially the inverse of the bond yield. So bond yields back in 2018 were high, and we're trying to reach that level in the bonds, and thus TLT is reaching down to these levels here. Are we going to get to that level? Perhaps, but only time will tell. I think there's a fair chance of it, but we'll see what the oscillators show here in a second. But the TLT is an investment vehicle that I essentially have never purchased. I look at the TLT as another means of looking at interest rates to see how interest rates are moving and when they may top out or whatever. And of course, that's when TLT bottoms out. And then when bond yields bottom out, TLT tops out. Let's move on into the oscillators. First here into volume, very interesting, all the way back here, 2019, all the way through to the current time frame. The volume has exploded, and that's kind of what you want to see on the downside for any stock, ETF fund, or whatever. You want to see a lot of sellers get out, because when it finally bottoms, then most of the sellers have fled. So that's what's happening with TLT right now. Into the MAC, there's certainly a huge difference between the fast line there, black, and the red line here. And that means that in the future, there could be lots of volatility, sideways trading, perhaps even more downside. But as you can see, the level of the fast line down here is the lowest it's been in this 20-year time frame. So you're going to see a lot of lows on the TLT. Again, here in the histogram, back here at this point in early 21, and then the same thing now, these two levels, you hadn't seen anything down that low. So it is getting absolutely crushed and punished. Into the price rate of change, it wants to bottom. It tried here, it failed, came on down, so it's going to try again with this sawtoothing. So we have time though, so just watch this. It's not time to buy, it's time to sit on the sidelines and watch the bottoming and basing occur. This will be a good fun to watch for that. Into the RSI, we're at a very weak 20.60. Once again, we're at the lowest level in the 20-year history of this chart. Down here into the stochastics, we're not quite as low as we are in some of these others perhaps. We're pretty close, maybe at that level there. Perhaps maybe a little bit lower than this, and certainly a little bit lower than that. But each of these periods were good buying opportunities. So that may present itself for TLT here in the near future. Keep watching. Same thing with the Williams. It's at a negative 99.78. You can't get much more negative. And if you go back here in history, there aren't any other times, it looks to me, that TLT through Williams has gone down this low. So it could be an opportunity if it fits within your portfolio. Moving back on up to the price chart, one last look. I think there's plenty of time to watch this. I think there's more consolidation that needs to happen. We're a little bit early. You know me, I'm early, but this is something to watch for the future if, again, it fits in your portfolio. But as usual, conduct your due diligence. And for today, that's ChewDog Charts. Thank you.